A reimbursement-based grant means that the nonprofit spends their money first, then they are reimbursed for those expenses by the grantor. Let's start by ensuring you have your QuickBooks Online account set up correctly. First, you need to ensure that you're using either QuickBooks Online Plus or Advanced. Then there are 3 additional things that you need to set up. First, you need to create a liability account called Deferred Revenue. Second, you need to create a product or service called Deferred Revenue. And third, you need to turn on locations and create locations called with donor restrictions and without donor restrictions. You can view those steps in a video called Add Grants in QuickBooks Online. I highly recommend you watch that video first so that you can ensure that your QuickBooks Online account is set up correctly and you can understand some key grant terms. For a reimbursement-based grant, we're going to make sure that we can bill expenses to the grantor. We'll head over to the gear icon and click on it, and then click on Company Settings. And then we'll go down to Expenditures, and I'm going to click on the pencil icon to open this section up a bit more. You'll see the items that need to be turned on. So track expenditures and items by donor, make expenditures and items billable, and track billable expenditures and items as revenue within a single account selected. With these settings turned on, the income and expenses will show up on the Statement of Activity report. If they weren't turned on, the reimbursement income and the expenses will be pointing to the same account. They would zero each other out and they wouldn't show up on the report. Now we'll add some reimbursable expenses. We're going to add 2 billable expenses. We'll click on New and then Expenditure. And the first purchase was made from Amazon on June 23rd. All expenses are categorized as without donor restrictions. And this was for supplies, which is an operating expense. And this was for $695. We'll check the box for billable and make it billable to the donor, Home Depot. And this was for the functional expense category, administrative, and then we'll click Save and New. And the second billable expense is a purchase from Walmart on June 25th. All expenses are without donor restrictions, and this was for toys for $850. Again, we're going to make it billable to the donor, Home Depot, and the class is programs. And then we'll click Save. There are 2 ways that we can change the account that's used for the billable expenses revenue, otherwise known as a reimbursement revenue. To change the default account for reimbursement revenue, we'll click on the gear icon and then click on Company Settings and then go down to Advanced. And then the Chart of Accounts section, we'll click on the pencil icon. We can see that the default revenue account is billable expenditure revenue. If you wanted to make a change to this default account, just note that it does not apply to previously created billable expenses, only newly created ones. Since we already created the billable expenses, we're going to make changes in a different way. So I'll click X, and then we'll go over to Sales and then Donors. And Home Depot is the business that provided the reimbursement-based grant. So we'll click on the first billable expenditure charge that we see for $850 and then click Edit. And we can see the default account is billable expenditure revenue, but we actually want to categorize this as business contributions. So we'll change that and then click Save. Then we're going to do it to the second billable expenditure charge for $695. We'll click on it and then Edit, and we'll also change that to business contributions and then click Save. We'll create a pledge that we can send to the grantor so that the nonprofit can be reimbursed for those expenses. Now we'll create a pledge to bill for the reimbursement. So we'll click on New and then Pledge. And this is for Home Depot. We can see the billable expenses. So we're going to add each one to this invoice, also known as a pledge. And these are expenses, so we're using the location without donor restrictions. And then we'll save and close. And then we'll click on the pledge again. We'll click on more actions, and now we'll receive the payment. And the payment was received on June 27th for the full amount, $1,545. So we'll click Save and Close. We'll head over to Reports and then Standard Reports, and then click on Statement of Activity. And I'm going to switch to Classic View. That's my preference. And the report period is this month. We're going to change display columns by location so we can see with and without donor restrictions, and then we'll run the report. And here we can see that our billable expense revenue is categorized under business contributions, and that was based on the change that we previously made to the accounts. So that's $1,545, which is under the column without donor restrictions. And we can see our reimbursable expenses. So we have supplies for $695 and toys for $850 for a total of $1,545. So our reimbursement revenue and our reimbursable expenses zero each other out. Grants with restrictions limit the use of the funds for a specific purpose or time frame, but they don't affect whether the nonprofit is entitled to them, as is the case with a conditional grant. So a grantor could require that the funds are used for a parent support group, or that the funds can't be used until the next year. Let's go ahead and create a restricted grant pledge. To create the pledge, we'll click on New, and then Pledge. And the donor's name is JB Towers, and the award date was June 15th. We're using the location with donor restrictions. This is a restricted grant, and we're going to categorize this as corporate contributions for $18,000. We're not using a class, so we'll click Save and Close and Yes to continue. The grant payment was received on the same day, so we'll record that. We'll click on New, and then Receive Payment. The donor is JB Towers. That was on June 15th, and I'll click on the box next to the pledge. We're receiving the full amount of $18,000, so I'll click Save and Close. The nonprofit spent $700 on the parent support group. We'll click on New, and then Expenditure. And this purchase was made at Staples on June 21st. It's an expense, so we're again using the location without donor restrictions, and the category, the expense, is workshop supplies, and this was for $700. We're not making it billable, but we are associating it with the donor, which is JB Towers, and the functional expense category is programs, and then we'll click Save. There is a new account that we'll need to create in order to move the funds from the with donor restrictions column to the without donor restrictions column. The income account is called Net Assets Released from Restrictions. This is only used for restricted grants. Conditional grants do not necessarily have restrictions. We'll X out of this screen, and then we'll go over to Transactions and Chart of Accounts. And then we'll click on the New button, and our new account will be called Net Assets Released from Restrictions, and the account type will be Revenue, and we'll select Nonprofit Revenue as a detail type, and then click Save. Now we'll use a journal entry to move the funds over. To create the journal entry, we'll click on New, and then Journal Entry. And the journal date will be June 21st. This is when the funds are being released from their restricted status. And we're using the account Net Assets Released from Restrictions. We're going to debit this account $700. And the donor name is JB Towers, location is with donor restrictions. And now the second line of the journal, it's also going to be net assets released from restrictions as the account. We're crediting the account and we're connecting it with the donor JB Towers. And this is going to be without donor restrictions. And then we'll save and close, and we're not using classes. So we'll continue. At month end, we want our statement of financial position to reflect the assets that have donor restrictions, which means they're not available for the nonprofit to use as it sees fit. Let's go over to the chart of accounts. We'll start by changing the name of the retained earnings account. So let's go ahead and find that one in the search field. And then we're going to click on the drop-down arrow and then edit. And we're going to rename this account Unrestricted Net Assets, and then save. Clear the search field, and then we'll create a new account, and this will be called Net Assets with Donor Restrictions. The account type will be an equity account, and we'll use the detail type owner's equity, and then save. Now that we've revised the chart of accounts, we'll take a look at the statement of financial position before we make our journal entry and compare it to the statement after we've made our journal entry. In the statement of financial position for this month, you can see that $85,000 is under unrestricted net assets. However, it's not reflecting the portion that's restricted funds. So we're going to make our journal entry to revise that. For this journal entry, this is going to be recorded at the end of the month, so June 30th, and we're going to use the account net assets with donor restrictions. We're going to credit the account $17,300 because we want to identify the funds that are restricted, and we're going to associate it with the donor, JB Towers, and then we're going to use unrestricted net assets, and we're debiting the account by $17,300. So we're reducing the amount of funds that are in that particular account. And again, it's going to be associated with JB Towers. And then we're going to save and close. And we're not using a class, so yes to continue. Now when we look at the statement of financial position again, we can see that $17,300 is appearing under net assets with donor restrictions, and $67,700 is under unrestricted net assets. To the fellow bookkeepers out there, I hope this video provides clarity on the steps that you need to take in QuickBooks Online. Drop a comment below. I love interacting with fellow bookkeepers on their journey.